Right, time to cut out half of the nonsense and the crap that you see on TikTok for all of these traders, right? I see a lot of them, and after time, I just put my head in my hands and just think, wow. Now, that's not to say I'm a great trader, but I am funded, I've had plenty of payouts, and more to the point, I seem to pass a lot, right? And I have this one, not just one strategy, but this is my main strategy, right? And I'm going to share it here with you, so carry on watching. I'm both a reversal trader and a scalper. That's how I trade predominantly. Usually the 1 minute, but I'm looking at the 5 minutes, maybe the 15 minutes, but I don't really go any higher than that. Maybe a little bit higher if I want to go for the kind of looking where the highs and the lows are for the day, previous day, session highs and lows. But other than that, I'm pretty much focused on VWAP, right? VWAP is balance, essentially. It is the session balance for the trading period, which means this white line that you're seeing here, I'm just going to expand this here so you can see this is the entire price action for yesterday. Today's not a trading day, there's a holiday, but that was the entirety of the price action on the 5 minute chart for the entire day, right? I'm going to kind of zoom in a second, but I just want to show you just some points to be mindful of. As traders, when we're looking to reverse and scalp, what we're looking for is those key entries, right? Now, I mentioned about balance because it's key. Whenever we're below the VWAP, we're out of balance to the buy side, meaning it becomes less beneficial to sell when you're below VWAP, and it becomes less beneficial to buy when you're above VWAP. Beneficial to in respect to balance, right, which is this white line here. So this white line is purely based upon the amount of trades and the amount of volume and price action that goes on throughout the day. These expanded lines are standard deviations. So the more out of balance you are with standard deviation, i.e. 1 standard deviation, 2 standard deviations, etc., 3 standard deviations, the more likely price is going to reverse. So particularly I like to focus on the 3rd standard deviation, but I will also take trades at the 2nd standard deviation. And so let's dive in. If you look here, let me just expand this out. This was the session. Yesterday was a great day. I passed an evaluation. I also took one of my accounts. I think I took it up about $300 or $400. It wasn't huge, but I was only trading here and there. You can see here, right, as we approach, I wouldn't really be too much bothered about the Asian session, but just to kind of highlight the fact, here's where we hit the 2nd standard deviation to the downside. Price reverses, comes back up. It's the 2nd standard deviation above the VWAP, right? There's 2 nice entries for scalping where you're going to make good bank, right? Then we come into VWAP, we hang around VWAP for a bit, and then we come up to the 2nd standard deviation. That would have been a lovely entry there. Even better if you're approaching the 3rd standard deviation, right? And as we move across, you can see here, I'll just bring this one into vision so you can see. Price then expands back up again, goes into the 2nd standard deviation. Nice little scalp there, but nothing great. Then we come right into that 3rd standard deviation. So if you're patient enough, trading's always about patience, right? Look at that for an entry. That hits the 2nd standard deviation, the 3rd standard deviation before doing a huge big sell-off right the way down to the 3rd standard deviation to the bottom. Something you just got to be mindful of though when you're taking these trades. You know, like when you see this move here, hits the 2nd standard deviation, lovely. We take a long there, took it to just beyond the VWAP. That's really looking for anything between 5 and 10 points, right? As a scalper, maybe 15 points, depends on your appetite. But then is what you've got to be mindful of, where price really starts to rocket through, right? And then starts hugging this 3rd standard deviation here. You've got to think to yourself, this is clearly symptomatic of, you know, what would be in our world the London kill zone. So you expect to sell off at that point. So you've got to be mindful. What I mean by that is you've got to have enough capital if you're reverse trading that you're scaling in, and you're not scaling in crazily. You're not starting with like 5 contracts, right, on minis as an example, or you want to start with low contract size micros and then kind of moving that up to size as you're scaling in, because realistically, even as things start to hug this 3rd standard deviation, nice, you get a huge move back up above VWAP, right? And that would have been a really nice move, okay? Then obviously we get into the New York session, right? So we didn't really come back into the VWAP band, so you sit on the sidelines, you wait and you be patient. New York opens up, what happens when we open up at New York. I'll just expand this out a little bit. Again, really nice move. London opens, New York opens up, comes crashing through right below the third standard deviation. Of course, as long as you're clever, you've got the liquidity zone here from the pre-session, and then we take out the liquidity, and then price expands. Where does it go right up to? Third standard deviation, right? And that's just sorry, my wife was ringing me. Really nice moves to the up and down side. Then, as we kind of keep moving forward and keep moving on, we can see we just hang around the VWAP. Then we see a couple of moves where we're kind of hogging around the second standard deviation to the buy side. You can get small scalps there if you so wish, but really what you're looking for is these third standard deviations, right? Each time coming down, third standard deviation, that's enough for a lovely scalp. Come back down, third standard deviation, enough for a lovely scalp. Come back down, just shy of the third standard deviation, comes back right the way through to VWAP. What's it doing? Imbalance, always seeking balance. Once you kind of get your sense and your mind into thinking like that, it really helps you kind of understand how the markets move, right? Because of the way in which things like market makers, liquidity providers, they want to trade where volumes are its highest, right? These big moves up and down, they're nothing more than to just wash out traders to get orders, because obviously they get a proportion of the spread, and that is their ultimate goal, right? To try to create as many orders with as much volume as possible. So that balance and imbalance is really led by the fact that VWAP is generally where you're going to get a lot more orders traded. So that's it, really. Keep it simple. Don't pay attention to half the crap you see on TikTok. I see it all the time. I have to laugh when I see some of the nonsense. Keep things simple. Look for when things are out of balance and capitalize on people who are still trying to short into the likes of the third standard deviation to the upside or the downside. More often than not, you're going to come up trumps. That's that one said. I will leave it there, and I shall hopefully see you guys in the next one. See ya.